Okay, we are recording again. And thank you for, okay. Just want to know that everybody is okay. And up and running. I just want to let me know when everybody's already signing so I don't jump in on participants. We have already the same, okay. Okay, can you hear me? Everything all right?
Yeah, I can hear you.
Okay. So yes, that is the point. $12.50 for the futures, 1.25 for the micro. And it sounds very little, but when you have $100 or 100-point drop on the S&Ps, you make the math, right? It's quite interesting. So coming back to options on S&P futures, as well as every underline, you're gonna have here all the expirations, and you have the days to expiration. That is not a problem. But you know that a day of expiration of this, you have to be careful in terms of which day of the week is. And those expire at the end of the day, but you cannot buy more 15 minutes before the close. So you have to be very careful in that regards. And the other thing that you have to take in consideration, if you see here, the August 21st, one day to expiration, it says 1-ESU21. What that means, that every time that you buy an option in S&P futures, if it says $8, the cost is gonna be half. Let me explain you. It says, okay, this is $8. You're used to know that every time that you buy a regular underline, you have to pay $8. In this case, it's half. Why? Don't ask me why, but that how it works. So every time, and it's the same for your risk. I mean, it's nothing changes. The only thing that when you are trading S&P futures or micro, both, whatever the option chain says here is half of the cost, for better or worse, but it's the same. Got it? For example, here, I want to buy the 8s, and you see that my cost is 400. It's not 8. You want to buy the 230s. Here, I don't know which one, this one's the 345s. And the cost is 172.5. That is the only difference. Everything is gonna work the same. It's a beautiful trading tool because you can trade options intraday and sell and buy as many as you want, and you don't gonna get an intraday pattern. Just be careful of course, of the commissions, but it's a good way to avoid your intraday pattern situation. And if you want to be really trading, so at least you can have a product that you can trade all day, right? And I think that these are the basics. I can get into more deep that we can sell in order to to sell premium. Later on, it has its advantages as well because it has a very low margin requirement. But I think that that is for another chapter and another situation. Right now, what I wanted you to understand is how the S&P's future works, how the S&P's options on future works, and why they are so they have so many good advantages in terms of leverage, of course, the intraday pattern for those who doesn't have 25K or more account, and a way to be active in hedging, right? I mean, you want to hedge quickly, okay, just buy a micro immediately instead of why? Because instead of forget about the options, buy directly a micro. You don't have decay. You just need $12,000, $1,200 in margin, and you already cover there, right? You know that is $1.25 for each tick, or but you can, of course, you can swing whatever you want. I mean, yes, you can stick with an ES all year, but the only thing that you have to have is money on your account, because the margin requirement is going to be up every day. In the ES, I mean, this amount that I show you here, the $14,000, you have to have at least $14,000 available every day, and that amount is resetted according. If the price of the S&Ps goes up, that amount is going to be up. It's adjusted every day, and regardless if you win or lose money, the brokers want you to have that amount available every day. So yes, you can. This is swing. This shed doesn't have expiration. The future, not the options. The options is the same. They have the expiration, and you can swing them and do whatever you want with them. But it's a different story. I mean, it's the beauty about the futures itself is that you don't have decay, you don't have nothing, expiration. You just have to be careful in monitoring, and it's a good way. But always remember, guys, is futures S&P ES equivalent to 500 S&Ps, micros to 50. So if you have a long position and you have a TOS, you can go to the Analyze tab and see what is your delta. How many of you have a TOS? Otherwise, I'm not gonna waste my time here. I mean, just wanna know. Give me a thumbs up. Who is it? Timmy, who else? 9 Tanks, Chucky, Ham, Alfred. Okay, guys, so now that you're telling me that, I'm gonna show you one more trick here. And Ham is we've been discussing this many times, and Ham know about this, but I'm gonna put here, let me just give me some time here so I can set it up. Sorry guys, the disadvantage of having too many screens is that once you want to share something, is a mess, as you can understand. But okay, let me see. Let me see, how can I do it? Okay. Your screen is sharing pause. Okay, see? How can I change that? Okay, chair. Here. Okay, we're gonna be to analyze tab. Okay. Are you all watching my analyze tab here?
We only see the option chain for ES still.
But what about now?
Yep, I can see it.
Yeah.
Can see it now.
Okay. Okay. So if you go to analyze risk profile in your TOS, you are able to analyze your portfolio in terms of risk reward. So what are you gonna do is gonna go here. You're gonna make sure that when it says here hide here, you're gonna put hide simulations, because that is gonna hide as many simulations or trades that you tried to do and didn't fail. And then you're gonna go here to portfolio beta wages. Okay. Once you have it there, you know everything that you have. In this case, for example, me, I have only futures here. Okay. Everything that I have here, I'm gonna put it like that. Okay, here it is. It's reflected here. What that means? Right now I'm $10,000 down here. If the S&P, because it's related to the S&P, and you have to relate it here, either to ES or SPICE. Many people likes to do it in SPICE. For me, it's the same, but I always do it in ES because I trade futures a lot, but you can put it on ES here. Make you a more accurate. And probably, okay, probably you're gonna have, you have to go to slides, set slides, and go to 11 rows to set up. And it's gonna give you the 11 rows by 2, and I just adjusted because I want to be by, for instead of 1, I buy by 0.5, and then I go to 1, and then I go to 2, and then I go to 3, and then I go to 4, because more or less right now is what the market is gonna move as much as we would like to, right? And here is 0, which is where the S&Ps or the futures are, and you go to minus 0.5. Let me see if I have questions. Minus 0.5, and then I put my 1%, my 2%, my 3, and my 4. And then so many people tell me how much you hedge. This is a way to do it. I mean, is you see, okay, if it goes, if the S&P futures goes up, I lose 4,000. If it goes down 1%, I win 11,000. So that's the way that you hedge. I mean, you already see how your portfolio is looking, and more or less you can identify how much of a hedge. You never take a hedge to get even. Otherwise, take your position off. I already have told you, a hedge is to hedge at least 20-30% of your, but if you're hedging, it's because you still believe that your positions are gonna be your way. But if you really think that everything is gonna collapse, you just sell it. I mean, you don't hedge, right? That's the best hedge. In my case, right now, I've been very stubborn with the S&Ps, and it's right now it's growing. But I know that that is gonna come back after 2 o'clock at night. in the morning Central Time, because always do the same on Sundays, right? So that's a different story. But for example, that's my reality right now with my futures. Right now I'm $11,000 down. But if this shit comes down a little bit, 4406, we're fine, right? You got it? So this is my portfolio right now for futures. And I'm working on that one. So, and this is the way that any question how you can set your risk profile is a very simple tool. You can even, you have all your positions. You can, I don't want to take in consideration right now. This one, you take it off or you put it on, but you can see how much that position you have is going to give you if the S&Ps, of course, this is not exact, guys. Is based on the S&P's movement, and of course doesn't take in consideration increases and decreases in volatility factors. Of course, if the market dumps, I will have here to adjust it to something more complicated, like putting, okay, it's gonna dump, and if it dumps, it goes 10% more in volatility, which is what I'm doing here, and everything changes, but don't make it too complicated. I mean, you can put it that way as well, but more or less give you a nice idea of how you can manage intraday your portfolio if you so freaked out of how you're doing, right? Any questions? Alfred, any questions?
Now I'm just taking it all in.
So you got the idea. Any questions about why options futures are different in terms of you just have to take half? For example, this is at the micros, it's the same. I mean, it says 32.50, see? And let's see how much it's gonna cost me. $162, right? Because it's 1/10. Got it?
Yeah, I got it.
So don't freak out when you see that big amounts. And that is a good way for you to hedge, a good way to you to bet on the market, a good way to, if you don't have 25K, to be day trading without getting, how many times you have been in trouble with the intraday pattern because you've been trading spies, right? Hedging and getting out. You can do it through the futures, and you don't get in that shit, and so you leave your intraday pattern trading for the other underlines. So I think I hope that I gave you a good explanation about it. It was like a very quick, but I thought that I just gave you what you need at the end of the day. I mean, I can go far and go to history and here and there. It's what you need for what we're doing right now is what you need. And at the end of the day, let's make it simple, because we don't know, we don't have to know everything. We just need to know what we need for our convenience, right? So I just give it a Q&A now. Go ahead. Waiting. Futures more profitable. No. I mean, future more productive, but profitability doesn't, I mean, it's all depends, nine times. I know what you means, but it's a smarter play. It's more profitable in the way of ROA. Yes, because you have more leverage. Yes, I mean it's more. That's the idea. It's more profitable in the way that you invest less to have more more advantage. So it is the same concept. We're betting the price is going or down. If we long, premium increases as the price increases. Yes, no, I mean it's like yeah. But the beauty of future is that it gives you more leverage. You can do more with less, but you have to have some backup. But are they more profitable? Yes. And are they more risky? Yes. Both ways, right? I mean, it's of course what you said is correct. I mean, it's but you have to be careful both ways. What hours you can trade futures? You can trade futures starting on Sunday, 5 o'clock Central Time. And what I would suggest you to do is go to the CMA page. I'm gonna post it here. And you can see all the information about futures there. And then I will suggest you to go there first and analyze everything that you do. But I'm not gonna give you the blue. I mean, I'm just gonna give you the link right now. This is a page of all the future markets. Chicago Mercantile Exchange. But answering your question, you can start trading futures, for example, Sundays at 5 o'clock. The market's open Central Time. All the way until tomorrow. You cannot buy more futures 15 minutes before the close of the bell. And then after the markets reopen again, I think it's like 3:15, 20, 30 minutes before. I mean, almost all day. So, but you don't have an issue. Go to this page, look for exactly for the product that you would like to trade in the futures. All the specs of each, if you want to trade oil, corn, gold, NASDAQ, everything that I explained to you is explained there. It's gonna have different specifications, different, as I told you, different margin requirements, different time frames for trading. But before, and again, guys, before you trade any product, make sure you understand it perfectly. If not, ask me or look for the information in these sites. I'm not telling you to start trading this shit tomorrow. If you have questions, ask me. Okay? Please. Because most of the people who lose a lot of money is because they don't understand the specs of what they are trading. It's very important. But for the information I gave you, and if you follow my instructions for the S&Ps, futures, and options, you're okay. I think that I gave you enough information to be able to trade it. Yeah. Yeah. I mean, all depends. But yes, Chucky, is the thing is the S&P is never gonna move more than 3% on average or 2. If you go to NVIDIA, you wanna get a really good reward on options. You're not gonna get rich intraday trading spice. You're gonna get rich intraday trading underlines that move more than 5-10%, right? The good thing about the spice that they don't move 10% every day. They move 2, 3, 4. Hopefully they move -5 tomorrow. They'll be more than rich, but it's more level. So that is what is a hedge, because you know that it's not gonna get crazy. It's not like Nvidia or Roku that is gonna move 8% one day, 5. You know that is balanced. So your risk is more or less balanced as well if you play it smartly, right? Because it's an index. Unfortunately, this S&P index every time is influenced more than for 2 or 3 underlines. Before it used to be influenced for more, but right now Microsoft, Apple, Amazon, Tesla, if these 4 or 5 underlines move, they influence a lot the S&P. So and that is the question, what the markets are becoming, or the thinkers, the think tanks are saying this is not an index anymore, because even though it's an S&P 100, 500, it's influenced by 4, 5, right? So it's not an index anymore. So we have to be careful in that regards, right? Any other questions? And guys, I really thank you for taking the time. I apologize for not taking this course yesterday. I was so tired. You cannot imagine. I mean, I slept all night finally. I went to bed last night like at 10 o'clock and woke up at 9. It was a full 11 hours sleep than I haven't had in a long time. So now I'm ready. I'm ready for next week. Thanks that little Alfonso is overseas, but yeah, between the pandemic and the newborn, I didn't have the chance to really rest, and I think that I did it this weekend. So we're gonna be super excited for we're gonna do a lot of money next week. I can assure you that. I can assure you that. I'm the only one who can assure you that. You know that my conviction is always, I don't say lies. I just say what I think that we're gonna do, right? And I love you guys, all of you. Thank you for your support, and spread the word. Hopefully we can have more members, and see you tomorrow. Hope you, if you don't have any other questions, we can wrap it up right now, and enjoy your family the rest of the evening. Love you. Bye.